Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. And this update is for Monday, the 11th of March, 2024. Hope you're having a great day. It was not a surprising day with what we've just seen happen the last week. But we'll get into that in a second. As we do get started, keep in mind everything we look at is for education. Nothing is meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. All right, excellent. So as we look here, I put an orange bar, this vertical bar, I put that on last Friday. Okay? So that's last Friday's update, which was the first, right? Yep, that was the first. Okay. So let's talk about what the market did from last Friday, and we'll kind of walk our way through day by day. So let me unscrunch there. So we had a slight little gap down on Monday. We ran up to, at that point, what was an all-time high. Tuesday, we gapped down, okay, and just continued to push down. So we gapped down near that 5,100 level. We ran all the way down into the fib line. The next day, we gapped up, and we opened right near the confluence of the 8 and the 5,100. I'm not a fan of confluence at 100-point levels, but is it stronger than just at the moving average itself? Yes, of course. Just not the strength of a fib line. Thursday, we gapped up and broke to another all-time high, right? Nice. Today, we opened up and stretched up to yet another all-time high. And then what happened? Traders went, wait a second now. It's Friday. We need to take some profits because we've done so well over this week on how this pullback and this bounce. It was a great opportunity to enter right here on various trades right off of that bounce, right? So the S&P gave us just wonderful setups. If we look at the VIX, nothing really crazy happening on the VIX, right? So we're up a little bit on the VIX from where we were, let's see, 1, 2, 3, 4, 5. So we were sitting at 13. Now we're at, we were at what, 13 and a quarter. Now we're at 14 and 3/4. So we're up a little bit, but it's still such a low VIX. Nothing to worry about whatsoever. So what are we looking for this week on the S&P 500? We've been spot on for the last couple of weeks. Go back and check the previous videos and you'll see that we've been right spot on with what we're calling here. So we closed below the fib line, which is a fibit, right? It's black, so it's a fibit. If we bring this back out, right, that's the -5, okay? Line that's in there. So we closed just below that fibit. We're still in a bullish bias. We're at a rank of 2 because we're close to the fib line, but not close enough to the moving average, so it gives us a rank of 2. So what I'd like to see happen, what I would prefer to see happen, is over the next day or two, we kind of flatten off. We just go sideways a little bit, little up, little down, and we give the 8 moving average a chance to catch up and get closer to this fib line. And then, so if we go, let's say 2 days, kind of flat-ish type candles, and the third day, now we've got a moving average and a fib line sitting right on top of each other. That is where I'd like to see the bounce. Everything we're looking for right now is we want to continue to maintain higher highs and let's try that again. Higher lows and higher highs. Higher low, higher high. Higher low, higher high. That's what we want to continue to see here. That's the opportunities we're looking for. Places we're looking to actually go long on the position, or places where we get those pullbacks and those bounces, particularly when that is happening in conjunction with what's going on with the S&P 500, right? So we're looking at that 51.38. We've got to get above. And then, of course, we're going to snap a line on the swing high we had here today because that is our all-time high, right? That's our highest high ever historically on the S&P 500, 51.8926. We've got a 5,200 just above that. So if we do push up, we're going to look at that 51.89, 5,200, and 52.19. We've got 3 upside targets in there. And the 51.89, 5,200 level between those two, that's its own little blue zone in there. Doesn't really fit the criteria for blue zone, but the way that we normally draw them in pop and power option plays. But for the sake of will we see a break into that level and a failure, that's what I fully expect to see happen. I expect to see another attempt there with the wick breaking that 5,200 level before pulling back a little bit and then continuing from there. Can it just blow right through it? Of course. of course. But we have a zone now. Instead of it being a definitive line, we've got an area, a zone of the recent swing high and the 100-point level, 5,200-point level, that we could see our wicks kind of flipping around into a little bit. If we fail off of here, failure doesn't matter if we stay above the 8 moving average for right now, okay? And if we do break the 8 and we break through the 5,100, how bad is it? Well, if we go back again and look historically at what's happened in the past, we made this move up, we pulled back and we broke through the 8, bounced off the 21. We pulled back, we didn't quite get down to the 21. We pulled back, we got close, but not quite there. We pulled back, we got to the 21. We pulled back, we didn't get below. We broke below here and then we bounced, right? So we've been through the 8 before, so I'm not too concerned if it breaks the 8. I'm okay with that. The key is going to be, does it break through the 21? And if it stays above the 21 but below the 8, that puts us in a bullish neutral bias. What does that mean? Well, we're still bullish, not bullish enough to take directional trade off of it, or at least not a full trade. We could take an aggressive trade on our individual stocks if they are aligning with bullish patterns. We would be okay with that. But this gives us an opportunity to, if we do pull down, we know that it's pulled to the 21 before. If it violates this, we'll be in a whole different ball game and talking about a whole different setup if we start moving to the downside on that. And there you have it, ladies and gentlemen. Have a great rest of your day. I'll see you all on the next one. Bye for now.